And then I want to talk about a naked put or a cash secured put versus an in the money covered call. So in a cash account, it requires most trading platforms require the same amount of capital as a covered call. So if you have a stock that's trading at $100 a share and you sell the 95 cash secured put, they're going to make sure you have $9,500 in your account in order to place that trade. Versus if you bought the stock at 100 and sold, the 95 call and collected $5, you're going to be still at that $9,500. So really, there's in a cash account like an IRA or any non-margin account, there's really no difference between the cash required or the capital required in a cash secured put versus a covered call. Now, if you're in a margin account, your account may require less money buying power reduction to do a cash secured put. And that's why a lot of traders like cash secured puts, because even though you have $100,000 or $10,000 in risk, they're only requiring you to have maybe $1,500 in buying power. So a lot of people get very, aggressive because of their margin account. And sometimes that comes back to burn you, because you can lose a lot more than the buying power reduction in a naked put. And in terms of an in the money covered call versus a naked put, the risk is very similar. There's just really, if you look at it, there's pennies difference most of the time between the net credit of an in the money covered call versus a cash secured put. And we'll go through the spreadsheet and look at a few to show you what that looks like. Now, if you do a cash secured put, you don't have the ability to collect a dividend. So a lot of times I will write covered calls on stocks where it has a dividend coming up because I want to participate in capturing that dividend. And we just started, one of our members of the community, Tammy, kind of brought this idea up, and we've looked at it before, but you can use a cash secured put as a way to take the stock when a dividend is coming up. And I'll show you an example of one that we're in right now. So any questions about naked puts versus in the money covered calls? Is this